Hi everyone, it's Chris here from Serene Education. Going to be going over the four majors for the 14th to the 19th of June 2015. Going to be starting with the euro against US dollar, having a look at the monthly just to see how things have gone so far this month for the euro against US dollar. So look at the hard right edge and let's have a look. So we can see clearly by the candlestick that we've had a bit of movement through the month of June. We have started obviously because of the May close lower. We've actually seen euro rallying against the US dollar recently. So we've actually seen the euro testing the current resistance level high, support and resistance level roughly around this the 11200 level, I would say. And if I go so far as to actually adding the fib retracement level on here, to take the current high that we've seen, the all-time high to the current all-time low, you'll notice that the 38.2 level coincides beautifully with that level. And if I just take away my horizontal line I drew, you can see that level really comes into shape. And if I draw, just stick in the line, there we go. So now we can see, if I just pan back into where price is on hard right edge, you'll notice that the 38.2 level here, 38.2 fib retracement level, 1126.33 and change, you can see clearly has been a support and resistance for 2015. So a viable target from the the highs in 2014 down to these levels would have been targets. We did see the February March low. However, since March we failed to see any further lows for euro, as we saw April, a lot of negativity for the US market in terms of non-farm payrolls, etc. going forward. Then going into last month, we actually saw price trading higher than the 38.2 level. But by the end of that month, that physical month, price failed to close higher than that 38.2. It traded higher. In fact, through February, March, April, May, March, April, May actually traded slightly higher than that level, but failed to close higher. So this currently is a 5 month support and resistance level. So vitally important. If we are to see euro to gain strength, we have to see a monthly close higher, and that would then change the market sentiment. We're not seeing any further lows. Then likely what we're going to see through the weeks preceding that is further euro strength, and that would then push price higher. The overall bias on this particular chart, you'll notice on the monthly, is we still have negativity throughout the month, and the R-squared is complementing that. So we're seeing consolidation effectively in what is a negative trend, long-term trend. You can see a lot of positiveness on the intraday timeframes, and the daily and weekly is starting to take on more of a bluish tint. However, as I clearly mentioned, we've not seen prices actually closing lower. And this is a monthly chart, but we've still got another couple of weeks to go before the end of this month. So just gauging a bit of euro strength at the moment. If I drop down to the weekly time frame, I can see that clearly. Over the last 3 weeks, in fact, we've not seen any lows. We've actually seen further highs. And as it stands at the moment now, if we are to see a genuine positive monthly candle, then ultimately this level over here, the prior resistance level high on the weekly at 114466 and change, that would ideally be the close of the monthly candle, which would then give us more of a bullish stance, and then we could look to the upside. So what we're clearly seeing at the moment now is euro consolidating in what is very much a negative trend. And you can see by the moving averages, almost 3 weeks ago we actually saw price closing higher than the 20-period moving average, which is a start. However, on the close of that week, we're looking for price to continue to the upside on any given day after that weekly close. That failed to materialize as we saw further selling sentiment coming through for that week, and we saw a bearish engulfing candle. So here again, if we are to see any positiveness, we do need to see these levels being broken to see any further upside. I'm now dropped down to the daily time frame on the euro against US dollar, but at the same time I've also added my pivot points, both my monthlies there, which won't change for the whole of June effectively, but weeklies most importantly will change on a weekly basis. So every 5 days we'll calculate an algorithm for the open, high, low, close for that prior week, and then it'll spit out my weekly pivots plus the weekly R1, R2 and R3 to the upside, and then weekly S1, S2, S3 to the downside. Now you'll notice that the monthly pivots and the weekly pivots are below price, so clearly they're supporting bias to the upside on our near term. So if you want to, you can actually clearly mark those out on your chart. So it just clearly visibly tells you straight away at the moment now that price is trading above both the monthly and weekly pivot. So therefore we should be looking for a bullish bias. So on the daily, I can see that price has been moving to the upside over the past couple of weeks. Perfect. Happy days. However, having said that, we haven't seen price creating new highs. And we go back to May. We had some highs in May that price attempted recently over the last week or so, but failed to actually close and trading above it. And one thing you also see over here is both your 20 and 50 are below price, supporting price nicely here. However, the institution moving average is still above price. So clearly telling me that we are seeing positive movement at the moment now. However, it's still against a long-term negative trend. So any trades I'm taking at the moment now are going to be quite aggressive, and my stops are going to be quite aggressive. Well, my stops are going to be aggressive, and my targets are going to be very, very aggressive, because we're still trading an uncertain range. And you can see not really a clear trend over here. Price has just been consolidative. It's been moving between 2 points in a very messy range. Okay, so ideally what we're still looking for here is a continuation with monthly trend, which is negative. And overall, Euro is still painting a very bearish outlook at the moment now, predominantly because of things still stagnating within Greece and the ongoing issues with Greece at the moment. So looking ahead to this week, we would ideally like to see the current monthly R1 and the weekly R1 level being broken and price closing higher than that to give us a more positive, bullish bias for the remainder of this month. And clearly our institution moving average would be a viable target if and when we actually saw price closing higher than the monthly R1 level, which is in excess of 181 pips away. We can, however, if you wanted to, trade the more aggressive stance is find the 30.2 holding out as a clear support level here, remaining above the 20 and 50, above the weekly pivot, and then look for a bullish entry on a 4-hour bullish engulfing candle or 1 hour, depending on what you want to do, and then trade aggressively to the monthly R1 and weekly R1 level. But the downside to that is the risk, because of how close price is to that level. So clearly here you have two choices. You can either be aggressive, super aggressive, but be aware of the risk, or you can be more passive, wait for that monthly R1 and weekly R1 level to be breached above here, and then you can trade aggressively to that institution moving average above price. So there again, entirely your choice. Let's move on to sterling. On the monthly, let's have a look. Yeah, clearly here price has done exactly the same thing as the euro. It's hesitated. We've been in a negative trend for the best part of almost 10 months now. We've seen consolidation going to 2015, and price has now moved to the upside. You can see that we had a very strong support level through 2013, in fact, and price has been hovering around in that area. We actually saw the month of March closing lower, but we failed to see April really taking on that bearish sentiment that came through in March and then driving it lower for the continuation of 2015. So we saw the March-April kind of moving high again on negative US data, and since then we've actually seen sterling rising and reattempting the 20-period moving average, however pulling back by the end of that month, May. However, looking at this month going forward, you can clearly see that we've pushed way ahead and we're trading a lot higher than the prior 4 months of closes, of resistance. So clearly this is a good sign for price, because if I draw my fib level from the current low of 2015 to the current high in 2014, you can see that price is now hovering around at 61.8 at 1555.21 and change. So this going into the new week, ideally we'd like to see price trading above that. So look for any Monday, Tuesday, Wednesday, Thursday, Friday of this new week that's coming up to close higher. That would then give us a more bullish stance to then trade back towards that institution moving average, or back to the 50% fib retracement level here at 1586 and change. So drop down to the daily. Straight away I get a buy signal on my indicator box. Looking at the overall indicator box over here, you can clearly see there's more positive than negative. Yes, the monthly statement is still negative. Okay, so we're still seeing consolidation in what is still very much a negative trend. However, saying that, you can trade aggressively counter trend at the moment now because of the bullish bias coming through. However, saying that, you still need to follow the rules. It's still going to be applied mechanically in its approach. If you look at the daily here, I have a blue arrow, the candlesticks are positive, my RMO and my SMA are above the zero, all confirming that I should be looking for buying sentiment. My 20, my 50 and my institution are below price. So here again ticking there and still very much pointing to the upside. Having said that, we've not seen price actually closing higher over the last 3 weeks. So vitally this week, if we can get a break above the 61.8 and a continuation above the 61.8, then what we could do is look to target that 50% retracement level here at 1586. Or you can go just shy of that towards the May highs at 1578.56 and change. That would be a viable target for this week, if and when we do get a confirmation of continuation. Vitally important. 4-hour candle, let's drop down to the 4-hour time frame. See, breaking above the 61.8. Now, the Thursday break above, sorry, the 4-hour close higher. Then we had a 4-hour consolidation. It fell to close lower. It's still sitting above that. Now we need a continuation. So looking into maybe early Monday morning, look for that continue, that push high. As you can see, swing high, swing high, swing high, swing high. Price is still swinging up to the upside. So then what we could do is potentially look at drawing a weekly pivot level on here. There we go. Drawing the weekly pivots on here as well as the monthly. You can clearly see the weekly R2 level is where price is trading right now. So vitally important, get above the 61.8 or remain above the 61.8. Clear that weekly R2, then we can look at towards that weekly R3, which is the monthly R1 level as a viable target for this coming week. And if you want to, you can just draw that in a different color just to show you that that is a viable target. Change the color so it really stands out. There we go. Perfect. And between these 2 points, there's an excess of 123 pips. Not going to get all of it, but you should be able to tap into at least 50 or 60 of that going forward to this week, if and when we do get a close higher. There again, look at the fundamentals to back up the picture, guys. Look at the fundamentals. Great on the chart, but fundamentally driven. If there's any fundamentals out there that is weak for sterling, we could see that all crashing down. Or if we have positive US data, that could push sterling lower. So what we're looking to this week is to see any sterling strength and US negativity or weakness, okay, or vice versa. Let's now look at the US dollar Swiss franc. Let's have a look over here. Straight away you can clearly see that we have a bit of a mixed bag here. You can see on the monthly how indecisive the US dollar has been against the Swiss franc. We saw a lot of negativity at the start of 2015. We've seen a pullback through 2015. The February-March pullback. Having said that, we failed to see the December-January highs being broken or closed higher. We did see a trade higher, but we failed to see a close higher, and then we've seen negativity coming in for the US dollar over the past 3 months, in fact. And price is not too far off from the body close of January. So the 50-period moving average over here, that's in the clear support of price for 2015, in fact. So here again, we do need to see a continuation. If it is a genuine resistance level for price for 2015, then what we want to see is a close lower than the 50 period moving average, which would then open up the floodgates for further selling to the 2014 lows, which are roughly around that 8779 and change level. So here again, what we can do is bullish bias on the monthly, a bit of negativity coming through. The RSI is trading below the 50% midline, and parabolic SA that the dot is above price, not really good. But you can see clearly over here we're not in a trend. We're in a consolidation on the monthly time frame. It's consolidating between 2 points. It hasn't really been doing much, and if you look at the weekly time frame, you can see how horrible it has been. Having said that, we have seen a lot of negativity for the US dollar against the Swiss franc because we're seeing swing lows. If we're on a bull trend, we need to see price making new highs. That's failed to clearly play out on the chart. You can see that since March of 2015, we've not seen a new high proceeding to June. So last week, in fact, we saw 2 prior weeks of indecision, and last week's candle closed lower. But saying that, it's still above the institution moving average. So clearly we need to get below the institution moving average. It is, however, below the 20 and 50 perfect. We're not below the institution. Vitally important, the institution moving average is the most important moving average, and we need to get below that. So I'm just going to put on the monthly and weekly pivot levels for this week. There you go. Bit of a mess, but straight away the one thing that really stands out is the fact that both that price, looking at price right here, you can see it's closed both below the monthly, which is this purple line, or sorry, the maroon line, but also the turquoise line. So I know that price is in a negative stance at the moment because it's trading below that level. But also the same stance, I can see that price where we saw consolidation over almost a month ago. You'll notice that the weekly S2 and the monthly S1 has been a support of price. So here again, that would be a viable target if and when we actually saw price actually moving below the institution moving average, which is clearly on this level here. So now I can just mark those levels out of my weekly, drop down to my daily. There we go. So clearly break below this vertical line over here, which will be below my S2 level, and then I can trade aggressively to the current level to the downside. But you can see how tight price has become now because of that weekly bias that we've seen. Very indecisive week last week, which will then plot a very concentrated or very closely packed weekly pivot levels. So bias is still for negativity. Having said that, there's not, it's still very much in a tight range. So you're trading with a bit of risk because of the fact we're still within a consolidation. You can see over here quite clearly we saw consolidation or a pullback in May. Having said that, we failed to see new highs. And looking at the month of June, you can see it's been moving lower but very indecisive. Okay, so clearly got to be well aware of that. And if you're more than happy to trade a very aggressive squashed range, go ahead. If you feel that it's going to be a bit of a risk, then rather step aside, wait for a clear breakout of this consolidated range, and then trade the cleaner air, as I like to call it. Both the 20, the 50, and the institution on my daily above price. My indicators all setting up for negativity. Red arrow, red candles, RMO below the zero level, which is negative. My RMO is clearly below, which is negative. But I've not seen a new low. And you can see that last week, in fact, we saw prices consolidating at the weekly S1 level. So clearly need to see that broken this week before we see a continuation of negative trend. Very, very important, guys. Last bit of the day, US dollar, Japanese yen. Here again, you can see quite clearly on the monthly and the weekly, a lot of positiveness for the US dollar against the weak yen. And we've seen a lot of progression since the 2011 lows. We've seen a lot of positive movement to the upside, and prices, we saw stagnation through most of 2014, but when we did get a break going into August, September, October, November of 2015, we saw a nice bull move, break higher, and then she's reached a consolidation level which was the 2005-2006 resistance level high, and we saw a bit of consolidation. However, having said that, last month was a very positive month for the US dollar, and we saw a nice bullish engulfing candle break higher. Now we need to see prices moving higher this month to see a continuation of the upside, and we've not seen that yet. We've seen price trading slightly higher, but it hasn't been able to take the momentum put together through the month of May, and it still consolidates. So we should see a bit of hesitation on our weekly time frame. There we go. You can see the last couple of weeks prices consolidated, but it's still trading above this breakout level, and that would then put more buyer sentiment to the upside. So here again, what I can do is just apply my weekly and monthly pivots. So starting with the monthly pivot, you can see that price is still above the monthly pivot. Having said that, we've seen price pulling back. Last week was a bearish engulfing candle for the US dollar against the yen, and price actually pulled back to the monthly pivot, and then we saw a slight contraction as people took profit as we headed into the end of trading session on Friday. So traded into the monthly R1 level the start of this month, but saying that we've seen last week, in fact, actually pulling back and testing back into the monthly pivot. So price is still above the monthly pivot. Is it above the weekly pivot? Let's have a quick look at just plot of the weekly, and you can see the weekly is above. So no, so it's clearly trading both between the weekly pivot, which is on the upside above price, but also price is above the monthly pivot. So you can clearly see that price has been within a consolidated range, and if I had to mark it out on the chart, you would see that price is now trading between these 2 points. So not really what we wanted to see occurring. So here again, ideally we are seeing positiveness coming through on the long-term time frames, we need to see price making new highs. Last week was a bearish week for the US dollar. We need to see prices making new highs. So this week, when we drop down, we need to see price making new highs. So if I get rid of that box, you can see that the weekly is above, monthly below. She's above the monthly, the weekly S2 level. So if price fails to make new lows, then we could see more of a bullish bias coming back into the US dollar against the yen, and then we could see prices moving back towards the weekly S1, and then a reattempt of the weekly pivot, which is above us here at 125083. So this week, start off, we do need to see a new high to the upside if we are still to remain in a positive uptrend. Fail to do so, and we see prices this week breaking the monthly pivot, then we could see a greater pullback, and that greater pullback could take us back towards this monthly S1 level here to the downside, which is in excess of 165 pips. So here this week, look for, here again, look at the US data, look at the yen data, see if there's any positive US data that's out. If there again, if there's negative US data coming out, that would have a further negative impact on price, and we could see further lows going into the latter part of June. So do your due diligence. Please look at the fundamentals just to back up the picture for this week, just to see what the bias is in terms of the forecasts for any currencies of the US yen related. So there we can do your due diligence, guys. Okay, that's it. US dollar, the US dollar Japanese yen done, and that's the four majors for this coming week done and dusted. Okay. Before I end, please, if you are trading, please back up your trading with very strong money management rules. Vitally important, and then keep it as simple as possible. Let price dictate what's likely to occur this week. Look at the weekly candles, guys. They will give you an answer to all of your requirements looking for any positive or negative entries for the forthcoming week. Bearish engulfing candles, shooting stars at resistance levels, hangmans or morning stars at a very strong support would give you a bullish bias for that week. Let candlesticks really dictate what the emphasis, or who's actually holding the cards out there between the buyers and sellers. That will do a lot of the work for you. Then all you got to do is just apply a more mechanical approach to your trading in terms of requesting to see a new high or new low created with long-term negative or positive trend, whichever way the market's moving, and then just apply great money management rules to that. Vitally important, you do need to see very strong money management rules being applied, because you can have the best template in the world, but if you don't adhere to the right money management, you could lose it all. Okay, well, what we're doing as traders, we're just putting a lot of probability in our favor. We're using all the indicators that we have at our disposal to build a picture of what price is likely to do. It is still based on probability. Okay, so there again, very, very important that you do that. And most importantly, always look at the data. Look at the fundamentals. Always be vigilant. Always be aware of what market data is coming out. Don't think, it's a bullish candle on euro, I'm going to trade long. And you have some very, very negative euro data come out, or expected to come out, and when it does come out, go, oh, blast, there's something wrong with my template, why isn't it working? Always look at the fundamentals. Okay, and here again, we could see, we've got to look at euro, we've got to look at Greece. Greece is still an issue, very, very important issue that hasn't been dealt with at the moment. So people are out there who are looking to trade the markets, anything euro based, there's a lot of indecision because of the ongoing issues we've had with Greece, and you've got to be patient, got to be vigilant. Okay, guys, hope you have a fantastic trading week. Keep it simple, and most importantly, you guys trade serenely.